And you can also submit your questions via the chat box at the bottom left corner of your screen throughout the duration of the webinar, so feel free to reach out that way as well. So today's presenters are Tim Freundlich, the President of Impact Assets, and Shala Masana, an Impact Assets Giving Fund donor. And just to do a little introduction about both Tim and Shala, who we are thrilled to have here today. Tim is a long-time innovator in new financial instruments in the social enterprise sector. He's served in several capacities at the Calvert Foundation over the last several years, including his launch of the Giving Fund, which we'll be talking about later today, the Impact Investment-Based Donor-Advised Fund. He was instrumental in building the $225 million Calvert Community Investment Note, with more than $750 million invested into more than 300 nonprofits and for-profits globally. And he also helped launch Community Investment Partners. So he has a very extensive and wide range of relevant background that I think you'll be interested to hear about today. Shala has spent over a decade seeking to align her capital with social impact as an investor, as an entrepreneur, a family foundation president, a donor-advised fund holder, a personal lender, and a purchaser of community stock. And she'll be telling you about some of the different ways that she tries to create impact with her philanthropic portfolio later in the presentation. So turning to our agenda for today, Tim is going to walk through a quick overview of Impact Assets and what we do. He'll share with you the basics of donor-advised funds and impact investing, and then spend a couple of minutes talking about the Impact Assets Donor-Advised Fund, better known as the Giving Fund. After which we'll turn it over to Shala to share some of her experiences as a Giving Fund donor, and then Tim will provide some concluding remarks to open it up for a few minutes of Q&A at the end. So I will turn it over now to Tim to walk you through an overview of Impact Assets. Tim, are you there? Tim, you may need to press *7 to unmute.
There. Sorry, everybody. I was sitting there talking away. Welcome to the call, and sorry we're running a couple minutes behind, but I'll step it up and get us back on schedule. We have this technical platform is actually pretty robust and good, but it's also a little bit complex. At any rate, pleased to be here with you. On the slide that's up right now, I just wanted to start by just kind of seated everybody with the spectrum of Impact Assets, of what it's up to as a nonprofit financial services company in the impact investing space. And we spun out of Calvert Foundation, where I was, as Falake mentioned, for about 12 years. Gosh, it was a long time. And we, in 2010, 2011, and we've been building the Giving Fund since then, and a number of strategies that I'm going to just talk through quickly. As you can see, the Donor Advised Fund is kind of our core product, and I'm going to talk about that in some detail. So I'll leave that for the moment. We've been building that for the last few years into a current $100 million asset base of charitable assets that are invested into socially responsible and impact investing globally. And we also are working on a suite of investment strategies that we will hopefully be launching before the end of this year. There's quite a large technical lift in building them, but these will be thematic impact investment opportunities that can be held in people's brokerage accounts in addition to be invested in from the Giving Fund. And the first two that we're working on are global sustainable agriculture, so inclusive of the United States, but at least 80% international, working with things like fair trade and coffee and various sorts of commodities and small farm holds around the world. And then the second is a microfinance international product where we are putting funding into poverty alleviation and base of the pyramid financial services around the outside of the United States into microfinance. And both of those will, as I said, be able to be held in people's brokerage accounts with minimums probably as low as $25,000 and also be available to the Giving Fund as investment options. And we will be building out that suite to some small number more than these two over the coming years as we assess uptake and also which thematic areas of most interest. So we're really excited about extending beyond the Giving Fund with some real groundbreaking investment strategies that can open up impact investing for a much broader range of United States investors and their financial advisors. And then the third bucket of activity that we've been doing, and which is really important to us as a nonprofit field builder, is to really on-ramp the world into a better understanding of what's going on with impact investing. And Impact Assets 50, which is an online database, which is a scan of some of the top investment managers in the private debt and equity space of impact, is on its second, going into its third iteration, where we update it annually. It's a fully searchable database that is available to everybody. It's not just for accredited investors or password protected. It's right up there on our website, and we've found really great utility with it to allow the media and also financial advisors and also asset owners to really get an understanding of sort of a selection of the landscape. And it's not the best 50 managers per se, but they are top managers, and they are very well composed in terms of diversification across categories of impact, geographies, and structures of asset class to really allow people to see kind of a big picture view in a snapshot way. And we're pleased to extend that over the years and to keep honing it to be a better and better tool. And then the second piece of sort of the field building work we're doing is around it's not really news you can use, but it's more deep than that. It's a whole suite of issue briefs on areas of sort of discernment and inquiry around impact and impact investing and what does it mean. And those are all up on our website, and we've been using those for conference education, to work with financial advisors, and it's really been a great library, a growing library. We're up to 10. We're probably going to be up at 13 or 14 by the end of the year, and we'll be adding 2 or 3 a year ongoing across different issue areas, and also updating the intel inside of the existing ones as we go. So that's kind of the lay of the land of impact assets and kind of what we're up to. In terms of what is a donor-advised fund, I think some of the people on this call certainly do know what it is because they may be using it or have clients that are using it, but there's also probably equally a number of you on the phone who are pretty new to it. Donor-advised funds are basically a private foundation, a family foundation alternative. They're a personal or family philanthropic facility that can be set up with no cost, more or less in an immediate, within a day, by contributing a range of assets, including cash, but also real estate and privately held securities, all sorts of stocks and bonds that then get the tax break immediately, but allow the donor advisor to flexibly determine charitable grants over a long period of time, perhaps their whole life. And in fact, the wonderful thing about donor-advised funds is that they can be, the advising rights, if you will, can be actually handed down to the next generation, it means it can be a multi-generational and over a long period of time family vehicle for charitable grants management and contributions management. And what's special about impact assets is, of course, that we are not just dealing with the plumbing of that, the funding and the grants, but we have arrayed a whole, and I'll talk about this in the next couple slides, a whole range of really amazing impact investments, so that from day zero, all of the asset base can be aligned with the kinds of impacts that the clients want to create in the world, even before they make their grants to the charities that they care the most about, and these are any charities around the world, around the United States, and in fact can be international too. And Impact Assets is a public charity. It's a 501c3 public charity, so it affords a really the most flexible offering out there in terms of the kinds of feature sets that it gives to folks in terms of their tax deductibility. You can see a comparison chart here between a private foundation and donor-advised funds in general, and the Giving Fund in particular at Impact Assets. But it gets a better tax deduction stance with the IRS, as you can see in the first couple of lines, and also doesn't have some of the same requirements of payout to the grant to charities, although we do monitor that and suggest that people roughly mirror the private foundation requirements, but it's not actually a legal requirement. And it doesn't have some of the intricate requirements around excise tax on investment income that a private foundation may have. It also affords anonymity for donors who may want to exercise that in certain cases. You know, a great example of that is maybe a family member is a volunteer at a local soup kitchen, yet the family or the donor-advised fund of that donor wants to make a grant for $10,000, and that can really change the dynamics of the relationship as a volunteer. Some cases that can be very positive, and you wouldn't want to be anonymous. In other cases, people really value the ability to essentially have that come in as a disconnected value flow, so that they can concentrate on their relationship personally as a volunteer or a board member, but not mix that up with the financial support that they'd like to give. And I think we've seen that over and over and over again as a really great feature of a donor-advised fund versus a family private foundation. And just in terms of the administration, not having to file and deal with taxes and attorneys and accountants, but have that all handled by the donor-advised fund is a really great feature of donor-advised funds versus private foundations. And the administrative costs, especially for small accounts in the $5,000 to even $5 million range. And our donor-advised fund does have donor-advised funds upwards of $5 and $10 million, where the donors have still felt that a donor-advised fund is a better alternative than a private foundation with administrative fees well under 1% per year for the base administrative expenses, and for larger accounts quite a bit closer to 1/4%. So really rounding error on assets that have already been given to charity, as opposed to the kinds of expenses that a private foundation can have to incur on an annual basis with, again, tax filings and accountants and administration of accounts and all of that, check writing, et cetera, et cetera. I guess it's also important, just as I did with the donor-advised fund, kind of the 101 is, what is impact investing? Like, what does this even mean? And what is it different than socially responsible investing? Is it the same thing? I mean, we have a pretty pluralist kind of viewpoint on this, and I think getting caught too much in the lexicons that are emerging, or the taxonomies, it can be almost a disservice to what we're really talking about. But fundamentally, I mean, there has been a maturation of sort of purposeful investing in the world, purposeful around social and environmental impact, and it's been going on for decades. So this is nothing new. But what impact investing in the last few years has really, I think, galvanized is a sense of a sort of a point of view and a causal link that donors and their advisors and investors and their advisors are really seeking to accomplish some real direct interventions and outcomes in the world with impact investing, not just screening out tobacco, although that's a great thing, and we do that too, for example. And that's just one example of many sort of socially responsible screens that can be overlaid, but to really create sort of a thesis around the kind of world that you want to leave to your kids, perhaps, or that you want to live in, and around environmental and poverty alleviation and socially responsible business and the overall scope of impact investing and socially responsible investing has really caught hold. I mean, there's almost $14 trillion across the global footprint. In the United States, it's about $4 trillion in the broadest definition of sort of responsible investing, which is about 10% plus of the total investable assets in the U.S. And in terms of the real kind of high impact debt and private debt and equity impact investing, it's about a couple $100 billion right now, and it's been growing at a pretty significant compound annual growth rate over the last few years of sort of 20-30% plus. And what people are sort of wrestling with is this a carve-out? And this is a question for everyone in the call and everybody who approaches sort of socially responsible impact investing. Is it a carve-out from a total asset base, or is there a real attempt to do as much as close to 100% of assets in this kind of thinking? And we've seen increasingly over the last few years that folks are able to really pull this through a majority of their asset base, and it's certainly the Donoradvised fund at Impact Assets has done this and made this really, really accessible to folks. In that we have, we have this sort of standard flow of donation in, tax deduction given back, grants to charities over time, and investment in the meantime. But down below, you can see this real commitment to a spectrum of asset classes around impact investing, between private debt and equity investments, utilizing the Calvert Foundation Community Investment Note that I helped build, that Falaki was mentioning, which is just a really amazing global facility of community development finance and microfinance, and using socially screened mutual funds from Calvert, but also from a lot of other firms. We have investments in probably 35 different mutual funds at this point, many of which are outside of Calvert. And some of our new investment products that I was talking about, Sustainable Ag, will join this platform as soon as they are they're completed. And one of the real special features of the Giving Fund, which is not necessarily in place with many donor-advised funds around the country, especially community foundations, is really flexible integration with people's investment managers, their financial advisors, where we actually can essentially hire them to an account to be the investment manager for a portion of the assets or all of the assets. Sorry, I skipped a slide here. But as I was alluding to before, I won't spend much time on this slide, but the Giving Fund really creates kind of the maximum flexibility in terms of the kinds of assets that are accepted. At the same time, the grant options are also kind of organized for maximal flexibility. A lot of donor-advised funds will limit to U.S. charitable organizations that are registered as 501c3s. We certainly do that. There's 720,000 of them, and we don't limit in any way people's access to the full charitable landscape, other than to make sure that they're in good standing around the IRS, their charitable standing. But we also do grants to non-501c3s, and many schools and religious organizations, for example, may not be 501c3s. We're doing international grants for folks, and that doesn't come into play all the time, but when it matters for clients. And being able to make grants to charitable entities outside of the U.S. that are not registered in the U.S. and are offshore is kind of complex, and a lot of donor-advised funds are sort of resistant or don't do that at all. And then one of the real cool extensions of the grant making is that we do pretty customized, complex philanthropic distributions, and that could include hiring up of philanthropic consultants. In one case, we hired a for-profit film company to make a documentary on indigenous people's rights in the U.S. So really kind of the sky's the limit there, and there's some administrative costs associated with that, which we scope out in advance of doing them. But the ability to really have your donor-advised fund grow into the kind of impact that people want to have in the world is something that we're all about. And then, of course, the impact investing and just being a really good mousetrap in terms of online account management and all of that. And before I hand it over to Shala, and I know I'm running right up against my time here, but just to look at drill down into some of the Giving Fund investment options on the Global Impact Ventures platform, which is the private debt and equity funds that we allow people to target into with their asset base. The great thing here is that these funds would normally have $250,000 to $1 million minimums. We actually really cut those down to closer to $25,000, so that people can have access to these funds, and whether it be a microvest, microfinance fund, or a root capital doing sustainable agriculture, or any number of them. We've had about 12, and at any given point we'll have 5 or 6 on the platform, and that's a real great feature and very unique to us and flexible. Using the Calvert Foundation Community Investment Note for a near perfect liquid but very, very high impact loan fund that people can use as a cash alternative to really work on community development and poverty alleviation. That's a wonderful platform anchor for us. We have about $20 million in the Calvert Foundation right now. And then, again, we also use Calvert social responsible mutual funds, but in addition to that, we have worked with a whole number of advisors to reach more than 20 outside mutual funds over time. So that kind of gives you a basic lay of the land. Let me hand it over to Shala to talk a little bit more about her personal experience, and then I'll come back to you in a few minutes. Thanks a lot.
Hey, thanks, Tim. Can everybody hear me okay? Yeah. Great, and thanks for the overview. So I have a Impact Assets Donor Advised Fund, and I'm really excited about it because it lets me do impact investing in a way that was previously only available through a private foundation. I'm also excited about it because the default investment options, even if I'm not trying to get creative on my own, but just want to sort of select from the existing funds, there are a lot of really exciting and compelling options and opportunities to get into interesting impact funds for a much lower minimum than I might have to invest out of my own foundation, because I'm part of this larger fund. So I really appreciate that. So folks talk a lot about impact investing and what is impact investing, and so I thought these slides are a way of trying to show how I think about impact investing and why I need the support of impact assets to be able to do it in a donor-advised fund. So to me, impact investing, some of my impact and philanthropic goals are around economic empowerment and around job creation. And in a lot of cases, a grant isn't necessarily what's needed. Sometimes, if I'm trying to build economic strength, what folks really need is a loan or an investment. And so I think about, I could make grants, or if I have the ability, I could make loans or buy notes, or I could make private equity investments. All in search of a social impact. And so if you look across the bottom, those are kind of the ways I started thinking about it. It's like, well, they're all sort of the same way of using capital to try to achieve a non-financial goal. But in the case of a grant, I don't get the capital back. I don't earn any kind of return on the capital. So there's no place in the capital structure. It's just a grant. And in this case, this is an organization called Washington Cash, which does business development training for micro businesses. And so a grant helps pay for that technical assistance for those businesses. However, I also looked into doing loans or notes, and to do that on my own in a private foundation is pretty complicated. Before Impact Assets was around, I was trying to do this on my own, and there's a picture of all the files associated with one $40,000 loan. Underwriting is a profession for a reason, and so I, with my own foundation, don't want to have to also become an underwriter. And in that case, there was a return of capital. This loan had a very de minimis interest rate, so there was a return on capital. But it's taking some risks. It's still a loan. It might not come back. And then in this case, the non-financial goal was to support the development of a housekeeping worker-owned cooperative. And so we came up with a unique structure. But what's great is that since then, working with Impact Assets, I've been able to get them to just handle everything, and that's been pretty exciting. An example of a loan where there's not a return on capital would be Kiva. For example, if you do a Kiva loan, you can get a return of capital, but you can't get a return on capital. And so as you look at different impact investment opportunities, that's another way to sort them out. So then there's the concept of a note. So to me, I differentiate between a loan and a note. A loan was totally custom. I had to have paperwork drawn up and design the loan, whereas a note is much more of an off-the-shelf product. And so I just have to buy whatever they're offering in terms of term and interest rate. So Root Capital and Calvert Foundation both offer notes that have a social impact around economic development and are much easier to buy. And so I hold both of those things in my donor-advised fund at Impact Assets. And then what's really interesting with Impact Assets is the opportunity to make private equity investments. So Alter Eco USA is they sell a number of products, chocolate and quinoa being two key ones. And what they do is they work with worker-owned cooperatives throughout Latin America to make sure that they are empowering the workers, they're paying a fair trade price. And so they're really acting more like the marketing arm for these worker-owned cooperatives and helping them build economic power. And they've been growing steadily for the last 4 or 5 years. And as a company, what they needed to grow was equity investing. And so Impact Assets has supported them. I'm able to support them as an individual investor, and then Impact Assets is also able to support them as a larger fund. And so that's pretty exciting. And then here at Local was actually a little startup that someone I knew in San Francisco was interested in starting. And I just wanted to support him and support, the company starting up. But, I didn't want to get involved. I didn't want to have to, feel like, hey, buddy, you owe me. And so I was able to make an equity investment through the Donoradvised fund. And I think that's a really exciting opportunity because we're in a time of a lot of change. Our economy is changing a lot. What the jobs of the future are not what the jobs of now. And we need people to be able to start new businesses. But the problem is these new businesses are really, really risky because to a certain extent what I'm trying to fund is basically business model R&D. The new internet business of the future that's going to be super successful is going to be getting people to work together in ways they've never worked together before. So here at Local was trying to engage music venues, music promoters, bands, and listeners in ways that could kind of build a little economy and have them all support each other. But that's something that's never existed before, and it might work, it might not work, it might need a lot of refinement before it works. And so those kind of super risky investment dollars really are sort of a philanthropic investment in the economy of the future. And to be able to do that philanthropically is really exciting to me. And so and what I'm really excited about is to have Tim tell you about how they're actually going to create more opportunities to do this. So I'll hand it back to you, Tim.
We've been doing a range of sort of anecdotal investments that Shala was talking about here, and we've done about 35 of them in the last couple of years. And what we started to realize is that there's a real opportunity for innovation within the donor-advised fund structure to sort of institutionalize that process and make it much more broadly available rather than Shala having to source that friend in San Francisco just for her account. How could we take this into a whole platform that was a rich feature and kind of a thrilling feature for folks, not necessarily to use for a lot of their asset base, but maybe a few percentage points for the stuff they really care about. And so we're deep into R&D and are hoping to launch as early as September and definitely this year a really what I think is sort of the cutting edge of impact investing for donor-advised funds, which is a global seed stage, early stage company investment platform. And what we're doing, and I don't know if this slide really captures it that well now that I'm looking at it, but I think it's as good as any napkin for the moment. But working with the best accelerators and seed funders around the world over time to create a landscape of all the social ventures that are being started up globally, in winnowing them down to a manageable set of a cohort that we can essentially publish to our donor-advised funds on a periodic basis, perhaps as much as twice a year for 3 or 4 month windows, where people can see the profiles of these businesses, where they've been vetted by local experts, these accelerator programs and entrepreneur accelerator programs and professional seed funders around the country and the world. And really almost like I think of it as a dim sum menu, if people are familiar with those, where people can go in and rather than $25, $50, $100,000 deals that have been sourced one by individual donors for their accounts, actually be able to compose really radical diversification of at very small dollar amounts. And we're working to have those dollar amount minimums per company investment be as little as $1,000 to $5,000, and we're still, that's going to come out in the development phase over the next 3, 4, 5 months, and we'll set the, sort of the features and rules of the platform. But this is an offering to the field and an offering to our client base of sort of the cutting edge of the future of what you can do with philanthropic asset bases, and to allow people to get 10 or 20 or even 30 positions in companies they really care about and get to choose from a broad platform to put into their donor-advised fund with really manageable amounts. I mean, if you think if it's $1,000 minimums, 20 different companies, that would only take $20,000, where that's smaller than just one investment people usually get to make. And then and these are very risky. These are sort of almost recoverable grants, as Shala said. But they also have the opportunity to return capital and even upside. And so, this is an example of one thing we're working on. It's not going to be the last innovation that we do, but it is the near-term thing, and I think it's a really indicative of the kind of stance of innovation that Impact Assets is bringing to the DAF now and into the future. So with that little teaser for the future, I want to open it up for Q&A. Also, Falake, if you'd like to add some capstone comments. But thank you so much for joining us on this call, everyone.
Yeah, thanks for joining. If you'd like to ask a question live, please press *7 to unmute yourself, or we're also taking questions in the chat box at the bottom left-hand corner of your screen. So, yeah, welcome questions either way. It looks like one question's come in about innovation and whether this sort of innovation that you just talked about, Tim, will be available outside of the DAF.
Yeah, that's a great question, Eric. With some of the regulatory changes that are afoot at the national level, I think there's going to be increasing opportunity to leverage this prototyping that we're doing to be available outside the donor-advised fund, and even some of the recent work that the SEC has been doing around accredited investors being able to tap this, and some of the online platforms that are emerging. That we are, you got to walk before you run. And I think, the beautiful thing about a donor-advised fund is that it is all, I always use the word synthetic. We have this one big charitable balance sheet, if you will, and asset base, and can really cut down the barriers of transaction and diligence and everything. But I do believe that we will have, I know we have the opportunity to leverage this outside the donor-advised fund, either with partners or ourselves, and we need to really get this tuned up and rapidly prototype it internally. But I believe that we can get it outside of the DAF, initially to accredited, and then after the Jobs Act is finally published and fully vetted and in place, perhaps even to non-accredited investors at the similar kinds of very small dollar amounts per company. And I think it's a 2014 thing, though.
Great. It looks like we've had another question come in about the innovation piece. First, whether it will be available for investors outside the United States, and then how we are thinking about social return and impact measurement for individual investments.
So as far as the outside the U.S. Part of the question, I mean, the Donor Advised Fund is available to non-U.S. residents to some extent. The problem, of course, is whether or not they can take advantage of the tax deduction, and unless they're a U.S. citizen or have dual citizenship, and we have seen some of these, people in England, et cetera. We don't have a lot of clients outside of the U.S. because of that, but it is an option. Whether or not there's a way to somehow expand this into other regions and to sort of retrofit the charitable context of the local regulations, I mean, that's a heavy lift, and we started looking at that last year in England as a potential sort of expansion, but we have a lot to do in the U.S. and there's such a massive need in terms of donor and investor bases that we're kind of keeping to our knitting for the moment. In terms of social return and impact investment, yeah, I mean we have a pretty strong commitment to evolving kind of our impact assessment. Our internal investment team is right now across the whole platform, not just specific to this sort of innovation and seed stage, is tooling up a pretty robust impact assessment framework that we're hoping to start publishing out at the end of this year and ongoing. So we got an R&D grant from a couple of our board members to really make that an objective, and we're pursuing that. And as far as the seed innovation platform that we were just discussing, that'll flow through into that. And as we are working on the R&D of that, we want to be tracking the outcomes at the company level and also looking at the deal sourcing, the accelerators and the seed funders to assess their impact in terms of their interventions with the local entrepreneurs. And the first thing is to start naming the metrics and to be transparent about publishing them, and then you can kind of tune them up over time and iterate to develop them. So it's definitely on our to-do list, and we're working on it.
Thanks, Tim. Any other questions, either via chat or *7 to unmute? All right. Well, thanks so much again, everyone, for participating in today's webinar. I really appreciate the insightful questions and your enthusiasm for this space. Please provide any feedback that you may have. Either feel free to email us directly at info@impactassets.org. There will also be a survey that comes at the end of this webinar once you start to close out. So if you don't mind answering a couple of questions, we'd greatly appreciate that. There's also a paper if you're interested to learn more. We did an issue brief entitled Ultimate Impact, Unifying Impact Through a Donor Advised Fund, and that's available on our website and also available on the survey page that will show up at the end of this. So thanks once again. The recorded presentation is available, and you can email us for that at info@impactassets.org.
And Falake, is there a way to send the slides out to the registered participants, as Karim was asking?
Sure. Yep, we can do that as well.
Great.
All right. Thanks, everyone. We can give you 15 minutes back today.
Lovely.
Take care.
Thank you.
Bye.
Thank you. Please stand by.